Hey guys, welcome to a new interview with Bitcoin Edge, or basically Walter Wolf. We are talking to today. Walter, welcome. How are you today?
Doing great. Doing great. What about you?
Good, good. Interesting market today. We're recording this on the 8th of September, guys. Video will probably come out a little bit later. So, Walter, you're a trader. How did you ever get into, or what was your life about pre-trading, basically?
Yeah, so I have a bit of an interesting kind of story with that. So I'm 25 years old, just turned 25. So I'm on the younger side of the CT markets and all that.
Mm-hmm.
I originally started when I was around 12 in affiliate marketing. Not sure if people know who that is, but essentially I made my first six figures when I was 16, first million by 20. And when I was around 16, I realized that marketing wasn't really, it just didn't fit me. You know,
Mm-hmm.
I'm more of a, I'm not as social of a person as people who are in that field need to be.
Mm-hmm.
I was good at it because I'm a creative person, but it didn't fit my personality.
Mm-hmm.
So I got into trading by going to a few different affiliate events and meeting certain people that were into trading and telling me about it. And long story short, I ended up meeting a few guys who were willing to teach me. Um, so I really dove deep when I was 16. Obviously, I still was running my business at the time, so I couldn't fully commit to it.
Mm-hmm.
But it was enough where I kind of got the beginner's luck. You know,
Mm-hmm.
everyone has that streak when they first start
Yeah.
trading, where you just suddenly make money.
Mm-hmm.
And you think, oh, this is pretty easy.
Mm-hmm.
And then you soon find out that it genuinely is not that easy. Um, so I got into crypto specifically. So it's hard to say because it depends on what people refer to
Mm-hmm.
getting into crypto. I've been buying Bitcoin since like 2013, right? Because
Oh,
back in the
nice.
day when I was doing affiliate marketing,
Mm-hmm.
the people that I was working with, they were actually accepting payment in Bitcoin. So I was buying Bitcoin in order to pay for ad traffic and different campaigns and things like that. So that's kind of when I started getting into crypto. But I didn't fully dive into it. That was just me speculatively using it as a tool to just buy different things and pay for traffic for my advertising campaigns.
Mm-hmm.
Um, so I can't even count that as me being into crypto. And then 2017 came, and like everyone else, I hopped in, made a good amount of money, didn't take profits soon enough,
Mm-hmm.
still ended up with some profits, but then I took that profits and decided to go just kind of full time into trading.
Yeah.
Now I was trading legacy markets.
Mm-hmm.
I was trading futures and commodities. Basically, I was a huge gold and silver trader for years and years and years and years because it just made sense to me. The price action was very, very clean. And I was purely a price action trader for
Mm-hmm.
years,
Mm-hmm.
honestly. Up until the past year, it was just pure price action.
Mm-hmm.
Um, and I know some people think that with pure price action you can't really succeed, but you genuinely can succeed with just basic price action. But it's all about how you envision things, how you perceive and interpret and internalize price action.
Mm-hmm.
So some of the things that I do in my own price action, some people that are completely into order flow might deem bullshit, but it's okay because we end up producing very similar results only because of the way that I perceive price action, the way that I interpret that data. Um, so it ends up all being aligned.
Mm-hmm.
Um, and yeah, and I mean, I've to be completely transparent, I've been trading like in intraday derivatives for less than a year right now. It's been less than a year since I've fully indulged completely into crypto. Um,
Really?
I've always passively looked at crypto. I did a
Mm-hmm.
ton of brokering with Bitcoin.
Mm-hmm.
Where I would go on sites like Paxful and things like that, and just buy Bitcoin, sell it at a premium, and make
Mm-hmm.
good money that way. And but I've never truly looked too deep into crypto apart from the past year.
Mm-hmm.
But it wasn't as if I was starting from ground zero, because a lot of the same price action, I guess, concepts translated over very, very perfectly.
Mm-hmm.
Because at the end of the day, volatility is a function of available liquidity. So if you just find anomalies and inefficiencies in the market, and you know how to take advantage of those anomalies, then it's really all kind of the same. The part that gets different is knowing how to actually manage your own risk, because in crypto, things tend to overshoot
Mm-hmm.
more than they would when you're trading in like ES or something like that.
Yeah. Okay. And so were you like at the beginning, like taking a step back? Did you do it all from your parents' home?
Yeah. So that's how it all started. I had a little room. I come from a family of immigrants, and I think
Mm-hmm.
that is kind of what made me become an entrepreneur. Again, I
Being
started.
hungry.
Yeah, I feel like everyone has their own like breaking point where it's like, okay, like I'm never gonna work with someone again. I'm gonna retire my family. I'm gonna make sure that my family's taken care of. This, and that. For some people, it's different. For me, it was very family orientated, right? My breaking point personally, and this goes beyond trading, is when I was around 15, 16, my father is a Brazilian immigrant over here in the U.S., and he works in construction. So, it doesn't matter if it's snowing, raining, 100 degrees weather, he's up 50 feet in the air. Just to buy me a shirt, or to buy me an Xbox or this and that. And there was one time he got home, his face was bright red, because he was out in the freezing cold for 12 hours, 50 feet in the air, risking his life. So I kind of, at that point, that's what kind of made me decide in my head that he's never going to go through that ever again. I was going to figure out a way to make sure that that's never going to be a thing again. And that was my first why. I feel like you should always have whys, and they should always be interchangeable too as life progresses. At this point that I'm in right now, it's beyond just taking care of my family. It's more proving to myself that I am worthy of being great. Whether it's in trading or the next thing or whatever it is, I am worthy. So I'm going to work towards that. That way I have a consistent driver. And everything else will just be a consequence of me being great. Retiring my family. I want to donate to 1 million different charities that I like. It's not about the money. It's about what the money can kind of get you in life. And my whole kind of goal is to be able to one day make a difference in the world.
That's
and yeah.
A different hop. I'm hopping around a little bit. So you got into trading, and like you had a mentor basically, or a few mentors, who helped you get into trading. How did that go, and how did you your risk management? How did you get it under control? Because I know a lot of new traders start in a bull market. That's when most new people come on, and like with events like we had last night or yesterday, they get kicked out of the market. Did you have a wake-up call, like getting kicked out of a market or getting like liquidated, or a margin call? Did you have something like that before you understood risk management, or how did did your mentor sprint that into you?
So I mean, a lot of it. So I thankfully did have a lot of mentors, and I'll share one right now. Chris Laurie. I know a lot of people don't know about him. Some people do. Some people don't like him. I know him on a personal level. I mean, we get on phone calls all the time, emails. I consider him the only mentor I've ever truly had. He cares about me. So it's important to have mentors like that. Mentors that care about you as a person, and not just someone that they're taking money from. This is a mentor that if I'm feeling down, I'll send him an email. He'll call me right away, and we'll talk about it. That kind of relationship is rare to find, but it's so useful because as traders, it's very hard to meet people that are going through the same things that you're going through.
Mm-hmm.
You know what I mean? It's a very, very
Yeah.
lonely profession, and that's kind of why it's important to surround yourselves with friends and people who share the same experiences, and you learn from each other. You know, you kind of mentor each other. And as far as my risk management and all that goes, honestly, I blew a shit ton of accounts in the beginning. You know, just like everyone else. You know, you do well, and then you get greedy, you lose a few trades, and you start revenge trading. You know, chasing the pump, this and that. You know, maybe a trade's going your way, and you're adding on to the position, which increases your risk, and you're probably not calculating how much it increased your risk by. Just you're so euphoric. You know, those feelings show up even in experienced traders, and it's important to try and manage that. You know, it's very hard, and people say risk 1%, risk 2%, stick to that, and that is good advice for beginners. And me personally, the way that I do my risk management, I kind of like made my own way of doing it. It's very, very discretionary. So usually when I set up my trades, I have a few different stop losses. I don't completely exit a trade in one market. I usually limit off of my stops because there are plenty of occasions where it'll kind of hit your stop and then go the other way. So instead of just having it all in one go, I always leave a little bit, and I like to scale them down in 25% increments, just like DCA limit order on my positions, and that helps me out from a mental perspective. Because personally, I always felt shitty when I exited a position and then a second later it reverses in the direction that it was supposed to go.
And that way, you also like save some on fee costs, I would say.
Right.
Because market orders, like in crypto at least, you pay some fee, if you get marketed out of your position, stop loss. So yeah, good. Just for the listeners, some inexperienced traders are probably listening. So that takes a lot of how to say it, like mental strength, to limit out of your orders, and do it with small size. Is it ever like that it like gets you, or like that it's you F up, like you're weak to yourself, basically, not taking the loss quick enough?
Yeah, so I'm at this point, I'm very good at kind of knowing when my trade isn't going to work. I'm a very intuitive and discretionary trader. So even though I have my stop losses, 99% of the time, I don't completely follow them, only because the way the market moves into a level and the way it's dealt away from a level says a lot about what's going to happen next. And it's kind of how I've internalized trading and price action, where I know from just kind of way the market is moving that it's not just going to stop there and reverse. You know what I mean? It's going to keep going. So once I see that, I may pull out earlier than I wanted to. You know what I mean? Because I rather pull out early than hold a little bit more drawdown. And that comes with experience, just chart time. That's why I say it's important for everyone to try and not follow like traders, like step by step what they do, because a lot of the way that we trade, more experienced traders, is we internalize price in our own ways and we perceive the markets in our own way. So like some of the best traders that I know, that they don't follow exact systematical approaches to stop losses and all that. Like it's definitely good for beginners, because you can set a trade, walk away and not be stressed. So it's good in that way. But if you're actively trading like me, and I trade tick charts and 5-minute charts and very, very short time frames, if I know the trade's going to be invalidated before it's invalidated, I'm just going to pull out. I'm just going to minimize my risk.
Yeah, exactly. Sometimes like you're 5 minutes in and you were thinking to do a high time frame trade, for example, or a longer trade instead of a scalp. But sometimes your plan in a few minutes is already invalidated. You see premiums run up or something else, and that's something that can happen, and you're already taking action then.
Right. Yeah. Exactly.
Yeah. Let's see. What is one of the bigger events, like you've had, for example, the past year in crypto? What was something that like effed with you? Let's call it like that.
Yeah. So one of the things that kind of bothered me the most this year was that crash back in May, because I was very, very euphoric leading up to it. As was everyone else. I had made more money than I've made my entire career, from January to May. And, I thought I was on top of the world. Even though I've been trading for years and years and years and years, I still felt that emotion, the sentiment on Twitter. I was all kind of euphoric, and I saw the structure break, on the daily time frame at the top. It was a clear structure break and a retracement right back. And that was a clear short position. Like it saw it from a mile away. But I held. I kind of couldn't bring it to myself to short the market there, because of how euphoric I was, how euphoric all my friends were, and everyone was bullish. This and that. New paradigm. Blah blah blah. And then, I just kind of went to sleep, and I woke up and, I had lost a 7-figure amount. So that kind of opened my eyes a little bit, and I took a few weeks to just journal and meditate and just kind of figure out, what to do for that to never happen again. And I wrote down all the little signals that I had in my head, and I took notes of how CT sentiment was, how sentiment of the top traders were, my friends were, my own feelings. So next time I start seeing those things, I'm going to analyze a little bit more and be a little bit more weary about my positions, which is what happened over the past few days. Everyone was euphoric. The premiums were all high. Open interest was as high as it was back in peak May. I'm seeing all the red signs that I saw back in May a few days ago. But except for this time, I decided to stick to my system and short instead of hold my longs.
Yeah, I think you did you call it on Twitter basically, or did you? Yeah, man.
Yeah, I did call it on Twitter. It was a little bit of a meme call, but it was still the call. I mean, I had shorted before that.
Yeah, you were talking about the moon cycles in our chat as well. Like this one is with, what was it?
Yeah, man, the moon cycles, bro.
XLM,
I mean,
yeah, you were in chat. I think you had moon cycles on Bitcoin as well.
Yeah, and people think the moon cycles thing is kind of a meme, and it kind of is, but I mean, it works. And I don't know exactly why it works. It could be a number of reasons. Maybe there are big players who kind of communicate with each other to move certain positions during certain moon cycles. Maybe it's just enough people believe in the moon cycles, enough big players believe in it, that they are the ones kind of moving the market a little bit. Whatever it may be, it works, and I do use those cycles as a confluence. And there's definitely some alpha there for those who are interested.
Yeah. So, how did yesterday go for you?
Yeah, so I think I sent you a few snippets on how I took that trade.
Let me get them. I just pulled up the open interest for the guys from Coin Analyze so they can see yesterday as well. So this is the snip of the first, the profile one, I think. So what are we looking at, and what do we get from this?
Right. So this is a TPO market profile chart. And what I was looking for originally in the day before is I was looking for a run up and then back down to the previous day's value, which was around 50.3. So we never got that. Instead, we got kind of just kind of a neutral day where we just kind of consolidated in a range. We saw price try to go up, and we did end up getting a close above value. And then the next day, this is when the markets kind of took down. So usually, when we have trending days, my preferred method of trading is just play the mean reversion game. Which is as simple as whenever you get to a value area high, I personally wait for a lower time frame market structure break, and then just short aiming for the opposite side. And then I'll just do that back and forth until one side finds acceptance, and then all I have to do there is just trade with normal price action down. But so I didn't end up getting the trade that I wanted that day specifically, because instead we just kind of range. So I just played the range a little bit. But on the next day, we closed again above value, except this time we tried to get above the previous day's range, that reference point, but we quickly rejected down. So I was fully intending on playing the range. You can't tell by the screenshot, but there was the value area generating right there between those ranges. So I shorted at the top of the value area when it spiked above. I shorted with half of my put position there. And then from there, I looked at the price action chart for further confirmation. Right, so, and I sent you a snippet of the 15-minute chart on Bitcoin.
The second snip?
Yep.
Okay, pulling it up right now.
Yep, so if you can pull up the one that has the higher high, higher lows together.
Pulling it up right now.
Yep, and this is very, very basic market structure, and this is to show that you don't need to overcomplicate things. You never really do. It's just traditional price action can get you a long way. What fucks you up? Can I curse? Is that allowed?
I'm not sure. I sometimes do it. Comfy did it a lot, and YouTube hasn't given me a warning, anything. So I think you can.
Okay. All right. Yeah. I just wasn't sure.
No, me neither. But yeah.
So you have basic little market structure there: higher low, higher high, higher low, and then a lower high. And then from there, I'm expecting a market structure break, and that lined up around the same time that we had the spike up above the value area on the GPO. So from there, the confirmation that I got to enter in full position was that market structure break. And then if you move to the next slide that I sent you,
I have three one, like the middle one. I have three.
Yeah. Pull up the one with the fib.
With the fib?
Yep.
I have three slides.
Yep. There's one with the higher high, higher low labels.
Yeah, and then the middle one, like the middle. The second one you sent me.
Right.
Yeah, I have it. Yeah.
Yeah. So that one. Yeah. So very, very straightforward. I like using the bodies personally. When I use Fibonacci's for my entries, and I use the wicks for ranges. So again, very straightforward. Very you can go on YouTube and learn fucking Fibonacci. It's not difficult. Structure broke, drew a fib. I knew I wanted it to go short. I usually like to go short at the 50% level. And I like to line it up with the section NTA. You had a little liquidity void right there. The liquidity void has 3 levels of liquidity: the base, the midsection, and the top. Most of the liquidity is at the base and the midsection. You can't see that there, but yeah. So I shorted at the 50% there, and I was aiming for the lows. And I mean, I did get my take profit 1 on the lows. And then usually I'll leave 25% of my position. I'll move it to break even, and then I'll just let that ride until it makes sense for me to pull it out.
Yeah.
But that's how I took that short. It really wasn't anything crazy. This is just very normal price action. I used a TPO for greater confluence, and some target areas, but that's really all I did to take that trade.
Okay, and did it go well? Like,
yeah, no, I mean, it went
okay.
super well. I mean, I didn't receive any drawdown. It was just an immediate profit and just kept going.
Yeah, it was quite the cascade we had after that, I would say.
Right.
That's very near the top, man. Great job.
Yeah, exactly. And it's important that people don't go crazy with trying to learn a million different things. I'm newer to profile trading. I've been doing it for about a year now. But even before I learned order flow and profile trading, I was doing very, very well for years and years and years and years, just with normal price action.
Yeah, so I personally do not use profile trading, but but I've read some of James Dalton's books. But the thing is, this is a question from me, and probably some other followers or watchers have the same question. What exchange gives you the best volume or flow, and what makes it the best clear for you? Because it's basically volume per price level, that fills it. So what exchange gives you the most value that way?
So it changes. But right now, very straightforward. I use BitMEX for 90% of my profiling. So as far as market profiling goes, exactly, I really just use BitMEX. I mean, it works for me, and I've been staring at it for a long time. So I just kind of my internalize the way that I do profiling around them. For footprints, because I do use footprints a lot. Because one of the main things that I like looking at are where are the traders trapped? Who's trapped where? How much pain is there in the market and on what side? And the footprint is a really good way to kind of get confirmation of that. So for footprints, I mainly look at Bybit and FTX. I also look at BitMEX occasionally, but I'm a big fan of Bybit personally, because you have a lot of degens on there that get trapped regularly.
So for footprint, you use ExoCharts?
For footprints, I use Excel charts. I've been trying to get more into Sierra, honestly, but something about the UI design is just kind of, it doesn't really connect in my head.
Yeah, it's really hard to set up Sierra, I heard. I don't use Sierra. Yeah.
It's very hard to navigate through Sierra. I mean, there are YouTube videos everywhere, but I'm just too lazy to sit there and watch a few hours of video. But I'm slowly getting more into Sierra. But I do really like Excel charts. There's still a lot of work to be done on Excel charts. They just added Bybit to their desktop platform. So, but overall, they have a really nice design, very, very sleek. I also use Quant Tower for a few things. Quant Tower is where I do majority of my execution. You can just connect the API of your FTX account or BitMEX or whatever it is, and they have some footprints there too, and TPOs and all that. So they're also very, very useful, and they have a replay chart, so you can always do back testing on there. They'll give you monopoly money, and you can just do some back testing. So that's very helpful. And that's also a big benefit of Sierra. You can do a lot of back testing on there, and you can really customize just about everything on Sierra. So,
Okay. And premiums and discounts? Do you watch premiums and discounts, for example?
So I always watch, kind of the futures basis and the perpetual basis, because that gives you kind of a view on who's kind of leading the market. Is it derivatives led or is it spot led? And then you can find a lot of little divergences. Like I use futures basis a lot for divergences.
Mm-hmm.
To kind of see if we're in backwardation or contango.
Mm-hmm.
And then the perps basis is good just to see if people are more leveraged or if it's spot leading the market. I do
Mm-hmm.
look at a lot of CVD, which is cumulative volume delta.
Mm-hmm.
I like to separate the spot and derivatives
Mm-hmm.
CVD
Mm-hmm.
again just to see who's leading the market.
Mm-hmm.
Usually you'll have instances where the CVD on the perps is extremely high, but spot hasn't really moved that much. So then you have a situation where if spot starts to pick up and put the foot on the gas, you're going to see a pretty parabolic move. Or vice versa, if spot starts selling and perps are kind of overexhausted, we might see some liquidation cascades.
Mm-hmm. Mm-hmm. Yeah. 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 I personally look always at premiums and discounts. I can show you real quick, because this is what people are seeing in the screens, just to give you an idea. Yeah, so it's basically, you're looking for opportunities, where little liquidity squeezes can happen. If I summarize it correctly,
Right.
So what is, if you had to give a new trader who's only doing technical analysis, for example, if they had to add one tool to their trading tool set, which would it be? Because we mentioned a lot, but
Honestly, yeah. To be honest, I mean, so honestly, CVD is probably the most useful
mm-hmm,
indicator if you're just trading purely price action. You
mm-hmm,
know,
mm-hmm,
especially when you'll have an instance where maybe a liquidity void will form, and then the liquidity void fills completely very quickly, but CVD barely moved. There's a little bit of alpha there. That
mm-hmm,
means that the liquidity was very, very thin. It didn't take much buying or selling to really fill that void.
mm-hmm,
So that kind of indicates a reversal. And little things like that. CVD divergences. Um, there's a lot you can get creative with CVD. Open
mm-hmm,
interest is really good too.
mm-hmm,
And then if people wanted something a little bit more basic, you could always do something like a RSI and just look for divergences.
mm-hmm,
Or maybe even simpler a awesome oscillator and just
mm-hmm,
look for divergences there.
mm-hmm,
Um, I think yeah, the RSI works real well too.
mm-hmm.
I'm not a big fan of the RSI. I think the SRSI works way better for divergences.
Okay.
Um, and yeah, I mean, you really don't need much. VWAP is also pretty good.
Mm-hmm,
Um, let's see. I think that everyone who just trades purely PA should include at least some level of volume profiling.
mm-hmm, mm-hmm,
Whether it be a VPVR or whatever it is, usually the
mm-hmm,
VPVR will kind of show you if there are truly liquidity inside gaps, truly
mm-hmm,
liquidity inside certain order blocks. So
mm-hmm,
it's a good way for you to refine, your TA.
mm-hmm. Yeah. Like VPVR, I always have in my daily videos as well,
Right.
and that's something I really enjoy a lot as well. Um, yeah, okay. And technical analysis, do you use that a lot as well?
Yeah, so a majority of my trading is revolved around TA because that's what I've been doing for 7 years
Mm-hmm.
was just strictly TA, and I'm just now getting into everything else, and luckily I'm blessed with mentors that I can consider friends now, like
Mm-hmm.
Magus and Sting and Tommy,
Mm-hmm.
and you guys and all that, so it does help being in a community like
Mm-hmm.
that and having mentors and people around you who have different backgrounds. But me personally, I strictly traded TA for a very, very long time.
Mm-hmm.
But it isn't as simple either as just market structure breaks, draw fib, go in. There's a lot
Yeah.
of you got to know the context behind it, right? And
Yeah.
you do have to visualize or have some sort of your own internalization of how you visualize price. Like again, a lot of the stuff that I look at in my TA, some people might look at it and just say it's bullshit, but it works for me because it's just how I internalize what's going on in the market. Like
Yeah.
I can go through candle by candle and kind of tell you a thesis about why that candle formed. Um, it's just things like that. It's just kind of like trying to figure out the story of the market. And TA is only one tool of organizing the data to kind of see what the story is.
Yeah. What is James Dalton calling it again? Honed intuition.
Yeah.
Basically, and that really helps a lot. If you've watched charts, for a long time, every day, you get kind of an intuition, and you know what's gonna happen, and you basically recognize certain things, and especially if you use things like exo charts, with how to say it, with the trapped shorts, trapped longs, that really gives you a great insight. I personally look at it, I see premium shoot or discounts shoot, and that is basically how you develop, your honed intuition, and what to fade and what to not to fade. But yeah, it's basically time in the market, what really gives you that edge, I would say.
Right, for sure. And I think another huge edge is having conviction and what you believe is going to happen.
Yeah.
Because a lot of traders, they'll believe in their strategy and think they know what's going on, and a lot of the times they could be right, but they lack the confidence and conviction in their trades. It'll go a little bit against them, and then they'll maybe close the position too early. Maybe they'll have 3 losses in a row, and they'll think that their system no longer works. Because even though for me, I've been very profitable trading, but I've had multiple occasions in my own trading where my current system has lost 4 times in a row. And a lot of people would think that the system is wrong. But what about the other times where I won maybe 15 times in a row or something like that? So it's all about law of averages and overall throughout like a year span. It's really important just to stick to a system and just try to have as much conviction and confidence in your system as possible while managing risk. Managing risk will help with that, because it kind of removes the emotions of a little bit of drawdown, freaking you out.
Yeah. And I mean, execution is also a big part, like you talked about earlier, using limit orders, to exit when you were wrong. Because I know a lot of people, like spend way too much money on fees. I'm really about fees, just so you know. And that is something that makes a huge difference on the long run as well, I think. Or stop losses too tight, stop losses not on the index price. It will wick you out at tops and bottoms. So that's also a big part. Do you, if you have a stop, if you do use a hard market stop, where do you put them? Do you put them on the exact price? What is your invalidation, or
So I usually don't ever have one stop that removes me completely from a position. I usually limit out of a position the same way I kind of limit into a position. Like sometimes when I enter a position, I'll have maybe 50 limit orders in certain places. At the end of the day, it'll give me a better average entry price. And it's the same thing with exiting positions. I'll usually limit out, kind of like DCA out and DCA in. Now, as far as how I do my stops, where they go, it depends on structure. But for example, in that screenshot that I sent you for my short,
which one? The higher lows and the higher.
The one that has all the little labels. So my stop loss there was right above that liquidity void. if you see what I mean.
Yeah, the one with the higher highs and lower highs, right?
Yep.
Okay, yeah.
It would have been
So,
right above there. 'Cause if it goes above there, there's no reason if it's going to truly go down. Structure is genuinely broken. There's no reason why it should come back up. If it comes back up there, then this wasn't the trade that I thought it was. I'd rather get out and just wait for a cleaner entry.
mm-hmm,
So it's all areas that make sense to me. It isn't always something exact, like I'll do a stop loss below this low or below this high or whatever it is. It's wherever it makes sense to me, and sometimes that just comes with just chart time, just experience in the market, where I just know that if it goes here, I'm probably wrong.
Yeah.
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 It's all about finding anomalies. Like sometimes you'll be convinced with the trade, and then you'll see something kind of irregular in the order flow come in, which might make you kind of reduce your position a little bit. So it's very interchangeable. It's very interchangeable. It's very discretionary. I try to risk only 1 to 2% per trade as my maximum. Although usually I rarely ever actually get to 1 or 2%. I'll usually exit before I even get up there.
Yeah. I feel you. Did that like change over time, or like your mentors always told you like that is what you should risk, or?
Yeah, so my mentors have always told me something very, very conservative. So, like, again, my main mentor was always Chris Laurie, and he's a very conservative guy. It was always risk 0.25% per trade in the beginning, risk 0.5%, very, very low numbers. And I mean, he manages a lot of money, so I get why he was saying those things. But for me, a lot of it was kind of just like figuring out what works for me in my psychological profile. I'm not someone that can really hold a position for a very long time. I have severe ADHD, and I'm on the spectrum and all that. So I'm very like anal with everything, and always trying to do stuff. So I trade on lower time frames. I don't like holding trades for a very long time. So over time, I just found what works for my personality. There was a lot of back testing too. I think back testing is super important. A lot of people just don't back test, and that's kind of strange to me. To this day, I still back test before I even start trading in the morning. I'll do at least 30 to 45 minutes of just bar replay on TradingView and just kind of going through just to get into the flow of things, right? Because there is a trading flow, and the best trades that I've ever had are when I was in that trading flow, and usually I have an easier time tapping into that flow once I do back testing before my trade.
Yeah. So your morning routine. It's one of the questions I had as well. Is basically back testing a little bit of your setups before you get into it.
Right. Yeah. So my morning routines, it varies. Like I know there are a lot of impressionable people that are going to be listening, and I would love to say that I get up every day at 4 a.m., go on a run, work out, meditate, have a full breakfast, sit down, analyze the charts, and this and that. But honestly, it just depends, man. There are some days where I wake up early in the morning. I had a long night of trading. I'm pretty tired. So what I'll do is I'll just sit down, meditate a little bit. Maybe just talk to a few of my friends, read my book a little bit, just try and like calm myself down. And then I'll get into it, and then I'll back test for 20, 30 minutes if, mentally I'm okay with that. And then from there, I'll make a cup of coffee, sit down, take a few deep breaths, and just, go through and look at the opportunities that happened overnight while I was asleep, and just see what I want to look for today, and I don't trade every single day. There are some days where this doesn't look clean enough for me, so I just won't trade. I'll still watch the charts all day long, but that's simply because I enjoy it. It's like playing a video game to me. It's just fun. Um, but I won't be trading it. For me, I only get into trades that are very clean, are very obvious. The obvious trades are the ones that usually have the highest hit rate, at least for me. I never try to catch tops or bottoms.
Yeah.
I always just try to catch the first retracement off the level. And yeah.
Okay. Talking shorts versus talking longs, do you have any preference or which side you try to trade on, or are you always kind of neutral in that way?
So I'm very neutral. I'm I guess what I would call a volatility trader. So I never truly have a bias. It's whatever the chart says. I don't care if Bitcoin's at $100,000 or $10,000. It's just the structure looks bullish and bearish. If order flow is telling me sellers are trapped at the high or this and that, I'm just going to trade off of that. It's whatever rationally and logically makes sense for me. If I can't create a thesis around my trade that's strictly a logical thesis with no bias around it, then that's what I would like to do.
Okay, fair. An interesting question a lot of followers have is how much money should I need, to be able to day trade with? What is the amount of cash to use to day trade?
So that truly depends on the person's kind of needs for their like expenses in real life and all that, right? So
let's say $100 a day is what I need. I mean, we all know, at least my opinion is that $100 a day is something that's not possible. The market has to give you something. But what are your thoughts about that?
Yeah, so if someone wanted to make $100 a day, for example, so usually I would say $10,000 would be the minimum to make $100 a day. In a comfortable way, of course. You could put $1,000 into an account and make $100 a day in crypto and this and that, but you always have to kind of have the expectations that there is going to be a time where you're going to be on a losing streak. And that could be immediately. You could put $1,000 into an account and you can immediately have a 6-loss streak. So if you're aiming to make $100 a day on $1,000, then that means you're a little bit over leveraged, right? Because you're looking to make 10% a day, which isn't really realistic. Proper risk management would say 10 to 20% a month is the ideal profit target with decent risk, right? Assuming that you risk 1 to 2% per trade and you're not taking a million trades a day, which most people aren't. Most people aren't really ready to be scalpers. So I'm assuming most people watching are going to be holding trades for maybe a few hours, maybe a few days. And if each of those trades hits 1-2%, then you kind of have to do the math there. So that's why I say $10,000 is the minimum to truly make a comfortable $100 a day.
Okay, yeah, good. Good answer. Favorite exchanges and why? If there's something you do not want to mention, that's fine as well. But what are your favorites for exchanges?
Yeah, so personally, I have moved a lot over to Bybit. That's kind of where I'm at now. I was in FTX for a long time, but I don't like the things that they're currently doing. No offense, Sam. But yeah, so Bybit is where I've been trading a lot lately, and mainly because I really like looking at their order flow. It's very degenerate over there, so it's very easy to see, traders get trapped at certain levels. And it just kind of clicks with me in the way that I like trading. So that's why I use them. I also like looking at BitMEX order flow.
Mm-hmm.
Those are really the main two that I look at. Is just Bybit and BitMEX.
Yeah, I
Um,
completely
I
agree, and I also have them, in the screenshot I send you, like with the premiums and discounts. I look at it like that, but BitMEX and Bybit, are my favorites. Go on. Sorry for
Yeah, no,
interrupting.
no, it's okay. I mean, yeah, exactly. That makes sense too. I will occasionally look at footprints on FTX,
Mm-hmm.
um, because I guess FTX can be considered kind of smart money.
Mm-hmm.
To an extent. I mean, we had a few $1 million of liquidations the other night in the group that I was showing to, but
Mm-hmm.
yeah, if FTX can sometimes give pretty good execution entries if you're looking at order flow,
Okay.
but it's usually nothing that I can't find looking
Mm-hmm.
at Bybit, to be honest.
But
Bybit and BitMEX.
but
Um,
I mean, you're a low time frame scalper. I mean, I guess I can say that, right? Or you like to do short trades. What my problem is on FTX is that it kind of lags.
yes,
Like that,
100%.
yeah, and it's like, man, like, and Bybit doesn't lag, and for limit orders, Bybit has good liquidity. It's easy to get filled on limit orders or limit chasing a little bit. That's and
Yeah, I mean the notional value of your position on FTX is like constantly changing because of the way their mechanisms are. You'll see a few more wicks on FTX too that I'm not a fan of.
mm-hmm.
There's a lot of slippage, like a
Yeah,
lot of slippage.
yeah,
That's the main reason why I had to get out of there because
mm-hmm.
it was just insane. And there are plenty of occasions, even on like a $10,000 position or
Mm-hmm.
a $10,000 P&L,
Mm-hmm.
you'll catch like a grand slippage sometimes
Mm-hmm.
on certain
Mm-hmm.
coins. You know what I mean? I had an instance where I was trading GRT and I was up something like 30 grand and they just didn't let me close the position.
Mm-hmm.
It just gave me an error. The UI started freezing, and then by the time it resolved itself, I was in profit probably around like 30 or 40 grand. By the
Mm-hmm.
time I closed the position, I was able to close. I was only up around like 12 or 13 grand.
Yeah, I
You know
mean,
what I mean?
yeah, I know exactly what you mean, and or the thing is like you get front ran if you do like try to limit chase a little bit, you get front ran immediately, and there's no exchange that does it like that. If you try to do something with size, they front run you, and like,
Yeah.
yeah, that's really the. But I think like if you play some altcoins, like FTX is good, of course, but for scalping on Bitcoin or Ethereum, it's yeah, for me Bybit personally.
Yeah. I would never recommend scalping on FTX. They make it very difficult for you to
Yeah,
scalp on
yeah,
FTX. It's like almost impossible, especially if you have any amount of size. It just does not work.
yeah. I'm kind of through my questions, I think, already. Is there something I forgot? Do you think, like, or do you want to talk about?
There's something really that I think you forgot. But one thing that I just want to make sure that the
Mm-hmm.
newer traders coming in know is that don't overwork yourself. Don't
Mm-hmm.
go crazy thinking that you need to learn tape and order flow immediately, and don't listen to people on Twitter who are posting fucking 7-figure trades
Do not
and
listen to Alex Wise. We can make it a bit more simple. Do not listen to Alex Wise.
yeah. Don't listen to Alex Weiss, man. Just block him on Twitter. You just don't need it. All right.
Yeah.
Yeah,
No,
like
but good one.
yeah. Like this
Yeah.
is just got the bidding and the hospital bed. Like even that by itself shows some level of mental disorder.
I,
Just
I mean, I think we talked about it. I think at the start, right? If you get into trading and you get into it in a bull market, you're basically fucked. Your
yeah,
your psychology will be fucked the rest of your trading life. Because you
right.
got into a market where it was easy to be lucky, and everybody at that time, got lucky, and you're fucked for the rest of your life. You think you're a genius for a few months maybe, and then you get fucked. The trend
Yeah,
changes,
right.
and you think, well, this thing is going to the moon, right? You keep buying dips, and you end up with nothing. So.
No, 100%. I had an instance earlier this year,
Mm-hmm.
and I can't even say that this was skillful. I turned a $200 account on FTX into like 150 grand within 2 days of just kind of over leveraging and being lucky. Yeah, but it was like no skill required there. You
Mm-hmm.
know what I mean? Like things looked up, number go up, buy.
Mm-hmm.
You know, like
Yeah.
and anyone could have done that. And I knew plenty of new guys making a shit ton of money during that time, and that was around like February, March.
Mm-hmm.
You know, and a lot of the guys that I knew who got lucky lost it all a month later when the market
Yeah.
started crashing. You know what
Yeah.
I mean? So it's a lot harder than people think, especially when you're in a bull market like the one we're in now, where you have these 10% increases and then 30% drops or whatever
Mm-hmm.
it is.
Mm-hmm.
Um, the trading is hard. It's not something that you're going to learn in 6 months. It's not something
Mm-hmm.
that you're going to buy a course and then suddenly be able to compete against the professionals who have been doing
Mm-hmm.
it for years. It's a slow
Yeah.
progress,
Yeah.
and people really shouldn't put that pressure on themselves,
Mm-hmm.
because mental health is extremely, extremely important in
Yeah.
trading. You got to make sure you're taking care of yourself.
Mm-hmm.
Don't listen to people on Twitter saying that they turned 30 grand into 500 grand and it changed their lives because they were trading on FTX.
Mm-hmm.
Like, don't compare yourself to other people. Each of us have our own path.
Yeah.
And, just take care of yourself. Study
Mm-hmm.
at a pace that you like. Find a system that fits your personality. Find a time frame to trade on that fits your psychological level too.
Mm-hmm.
Um, and definitely make friends. I
Mm-hmm.
lived in Chicago for a little bit, working for a few funds there. A lot of them were remotely, and I wasn't originally from Chicago. So, in other words, I had no friends.
Mm-hmm.
I was very, very alone. None of my friends were into trading. I was just in a room trading all day, and it was very hard on my psyche.
Yeah,
So
yeah. I mean, that's
it's
that's that's that's, that's basically the reason I started this YouTube channel as well. It just was 2018 or 19. I found out about Discord and all these trading groups, and it really helped me a lot. And it's basically because you're sitting at home all day and you just wanna talk with the boys, right? That
yeah,
is that is that is really important, and talk over plans and correct each other sometimes. We don't do that much, but I mean, keeping it real or exchanging ideas or and things like that is really important. And yeah.
yeah, man. It's all about honesty.
Mhm.
Especially when you do make those friends. You want to be transparent in what you know and what you don't know. It's all about helping each other out. We're
Mhm.
all we're all aiming to achieve the same things. We're all aiming to achieve financial freedom to be able to do
Mhm.
whatever we want, whether that means being a philanthropist and getting into charity and all that, or maybe you just want to give your family a comfortable life. Whatever it is, we're all working towards something that's going to make us happy. So
Mhm.
it's important, man, to just connect with people, just make friends, just be genuine and honest. Don't try to show off and LARP and all this bullshit.
Mhm.
It's extremely important, man. Like trading is one of the hardest careers in the world, in my opinion.
Mhm.
Not because of the actual technical parts, but because of what it does to you as a person. But it's
Mhm.
also extremely rewarding in that sense because how much you can evolve as a person apart from trading.
Mhm.
If you really hone in on doing that.
Mhm.
And
Yeah.
yeah,
Yeah. Yeah. Options. Like that was the only question I kind of had left. But you're not doing yet options, but you're looking to get into it, right?
yeah, I'm looking to get into it now. It's definitely going to be a big market, so I'm kind of trying to learn as much as I
Mhm.
can right now about options. The closest thing that I do to options right now are like cash and carry trades.
Mhm.
Um, and you can do that in crypto pretty easily. I'm sure plenty of people know about it, but if there's a premium on futures or whatever it
Mhm.
is, you can just hedge.
Yeah.
Like for example, if the premium on futures is 3%, all you have to do in that situation is, buy spot Bitcoin, short Bitcoin futures, wait for
Yeah.
the expiry, or wait for it to go down, close the position, boom, you just
Mhm.
made 3%, and a lot of institutions do stuff like that. Because for futures, you don't pay funding for
Yeah.
futures.
Yeah.
So there's a lot of ways you can make money, especially when you're in a bear market. Like, when we're in a bear market, that's really all I do. I just kind of
Yeah.
switch to that kind of strategy, be very delta neutral, and just
Yeah.
kind of try and gain small percents here and there.
Yeah, I was always trading futures. The only thing, if you do futures, mind your leverage, mind your stops, because liquidity always is lower in futures. And like Walter said, there is no funding periods. It's only premiums and discounts, and you do get liquidated on the price on the futures itself. So not on the index price, but on the price of the futures itself. And there's lower liquidity. So mind your risk a little bit better if you're like, I don't know, some deacons, I'm just warning some deacons out there. Yeah, be careful with leverage. The liquidity is low. Yes, you do not pay any funding, so you can hold them for a few months. That is totally fine.
Yeah, and the viewers should also know too that leverage is just kind of irrelevant. You should really just calculate your risk. So if you want to look on FTX and other platforms, there's literally a little calculator, and you can just and put how much US dollar you want to risk, and just how much leverage it would actually be for you to risk that amount based on your stop. I think the calculation is like percent risk divided by how far away in percent your stop loss is, and that's your notional value. And then you can divide that into different positions if you want to scale into positions. Little things like that. So don't focus too much on the leverage. Just focus on risk.
Yeah, good point. Good point. Fair point. Did we forget anything?
Not that I can think of.
Okay, we did forget one thing. Make sure to follow Walter Wolf on Twitter, guys. It's at WWolf Crypto. You can follow him there, and he tweets quite a bit about his actual trades and some things that are coming with it. That was it. Thanks for watching. Wolf, you can say your thing. Walter.
Yeah. Okay. All right. Well, thanks for having me, and I hope everyone watching got a little bit of value from this. And if anyone ever has any questions, you can always DM me on Twitter. I'm always open to giving back and helping people out.
Cool.
And yeah, I hope everyone has a nice day trading.
Thanks. Thank you, Wolf, and we'll talk.